Hey, hello to everybody. I'm Penelope Miyamoto, and we spent the last 6 weeks or so revamping the training. Um, the reasons we wanted to do it was redundancy had crept in over the years. There were course 13 and 14, which, for example, which just duplicated stuff that was already in the last mile. Um, a lot of the sort of graduate level material was together at the end, and in some cases, I think people ran out of steam before they even got to it, and it wasn't in the place it belonged. So we're trying to make it much more organized. Um, Also, it's a year since the last update, so everything got updated. We've added more new material. There's more on industries, which is the end of the chapter on industries. We'll probably be adding to that over time. There's quite a bit more on working capital, more on equity investment, and all the way through there are minor updates. We've also improved and enriched the many calculators that are in it. So what we didn't touch the ACE framework. What we touched was the stuff at the beginning that says introduction, start here. Acquira are systems of people, the glossary of everything Acquira, the gauntlet, and then all the courses, 1 through 14, the last mile, Acquira's short guide, which wasn't short, to to non-operating investment, and the intrinsic value calculator. And we've now got an organization that makes much more sense. Course 101 has the gauntlet in it. Course 102 looks at crafting your investment thesis. So it looks at how you choose the cities or MSAs that you operate in, how you discover and analyze industries, understanding where you can go to get finance, and understanding equity investment. And that is where you'll find Acquira's short guide to operating investment right now. Then finding and screening deals is a shorter course about organizing your search, about dealing with brokers and developing a relationship with the seller, about how to screen businesses. And then we have the intrinsic value calculator itself, the first pass. And I don't know how many of you have tried using it, but it gives you a fairly quick view to know if the price that the broker has slapped on the deal and the multiple is over or underpriced. And you can get quite good at screening deals using it. Maybe spend 5 or 10 minutes on each deal. You'll come back to that later when you've got your LOI countersigned, and you'll do an in-depth pass of it. Then we go on in course 104 to analyzing the business, including pre-LOI diligence and financial materials, getting to the investment committee, and there's one on how to deal with sellers as well. The final one, course 201, which we numbered differently because it's a bit more sophisticated, is the last mile, and we've broken that up into its logical chunks. There's a module that takes you from the search to a signed LOI, one that takes you from the signed LOI to your final investment decision. Then there's a break where we have the intrinsic value calculator, second or in-depth class, and then the final one is your FID to the close. Next slide. So this is what they'll look like on Tuesday morning. We're going live Monday night. there's nothing really different here. For the introduction describes what the course design is. Each course has 3 or 4 modules, generally 4, and you'll see here. And the gauntlet is now in the last module of course 101, which is a Start Here course. Okay, what cities, this is crafting your investment thesis. What cities should I start my business search in? That's been improved because we've updated the worksheet, which up to as of April 2024, which has data on populations for 384 MSAs over the last 4 years, with the latest 2023 per capita income growth over the same period. There's a sort of brief précis on what the tax is like in the state. Understanding your financing options. There's a financing options calculator there, and we have reworked that. After that, we have understanding equity investment. And that's a fairly hefty course. We had written the short guide, acquire a short guide to non-operating investment. And we realized it could be looked at from one side or the other. You may want to get yourself a non-operating investor to go in with, or you might want to be an operating investor who tests the water by not actually being an owner-operator right off. Then we have finding and screening deals, how to screen businesses. These are pretty short courses, and they're basically, I think, 6, 7, and 9. Old courses 6, 7, and 9 in business selling platforms and brokers. Then we have a module on how to deal with sellers. It's on analyzing your business. It's just got 3 modules in it. The first is how to deal with sellers. The second is fairly complex. It's got 2 calculators in it. The home service business financial calculator, where you can put in your anticipated revenues and expenses and a line-by-line analysis of those, and your financing. And then what we used to call the pre-LOI diligence checklist is we're now calling it a tracker. We redesigned it to make it a bit easier to track where you are with your 200 or so diligence questions. And finally, the investment committee. That has not changed very much. Then we get to the last mile. And as I said before, it's broken down into the logical stages. And the post-LOI diligence tracker with all its questions is in the second module. Then we have the in-depth IV calculator, which allows you to assess a business across 11 criteria. You decide where the risks lie in each of those criteria, how you can mitigate the risks, and how that risk or your confidence about that criterion changes the value of the multiple, and it all calculates everything automatically. So you might have a business that was priced at 1.8 million, and the multiple, say the multiple was 3.1 times. When you actually recalculate it with the diligence tracker, you'll see something different. You know, it could be undervalued, it could be overvalued. We talk a lot too about deal killers and how to avoid them. The last mile from the FID to the close is the last course here. And the behind the scenes work we need to do to go live. This is 600 pages with the we've added. It's about 800 pages. Andy needs to change ClickUp so everyone who completed the old course shows as completing the new. We have to publish the new modules and unpublish the others. We have to give everybody access to the new bundle of 19 modules. And then there are 4 of us who have been working on it. I worked on the writing. Melissa has been working on all the setup. Andy on the ClickUp side of things, and Eduardo has been working on the AI images. The plan is to go live end of day Monday, and if we do end up with bumps due to the ClickUp transition, we'd be grateful for your patience. Going forward, we have training planned to look at things like how to do off-market sourcing yourself, how to find private equity yourself, whether through individuals or search-based investors. And we would really like to get feedback from you on the training. So please reach out on Slack to me for any of the content covered today or your ideas for future content, to Andy for anything related to training and assignment completion on ClickUp, and to Doug for any comments or requested comments or requested content on AE courses. Next 3 slides show the mapping from the old to the new modules. I'm going to send this presentation out, so if you have any questions, you can just look at these 3 slides. We don't, if you're halfway through the courses or if you've completed the courses, I wouldn't go back to the beginning. If you're searching still for a deal, I would consider looking at the course Discover and Analyze Industries, which is 102-2. So you can see what we say about specific industries that's new. There's quite a bit new in understanding your financing options, and understanding equity investment is something I think it would be great to have a look at if you haven't, and read if you haven't done it anymore, if you haven't done it before. And the last mile. I'm not sure how many people have gone through the last mile. We've tried to make it a bit more approachable. It's got lots of images now, so enjoy reading it. I wanted to go through, with Hayden, 3 of our calculators. We have about 9 calculators altogether. They're proprietary acquire ones, and they're really the meat and potatoes of what we do.
Yep.
Mm-hmm. So if you look at this one, it's organized by state and by MSA, Metropolitan Statistical Area, within state, and you can track population growth over a number of years, and in the accompanying what city should I do my search in, we tell you how to track it, how to go about tracking it over other years, and how to do research on those areas. Also, you've got per capita income growth and stuff about the state income tax regime. As you go through, you can see in column U at the end a total score. Some of these things, the 2 at the end, column S is your affinity score, how much you like it there. And you can score it between 1 and 3. And your convenience score, how easy it would be for you to get to. So that would add to the total score. The first two here are done for you. And then if you decide this is an MSA you really want to do something with, you would click select MSA, and that populates to the bottom tab and shows you that. So this way you can collect all the MSAs on a single sheet that look as if you want to take a closer look at them. It was a lot of work doing this because it came from various sources, and I updated it for 2024. So it's now as up to date as it's going to be for the next few months. So that's that one. Hayden will talk about the next two.
Yeah, the next one is the post LOI diligence tracker. So most of you will probably have seen this already. We added sort of this note on highlighted items. So these are things that I always say that we need to get typically before even issuing an LOI. So because obviously you don't really need 100% of everything. And some people have asked a lot of questions on, hey, how many questions should I actually ask the seller before getting an LOI? Outside of that, there has been a bit of a logical reorganization here, as well as some questions have been removed and others have been somewhat rephrased, and others have been added. So I highly recommend everyone just go over this, and probably if you've been in your own data rooms taking copies of this, probably grab the most recent. And then the intrinsic value calculator has been changed. It's now actually the same sheet for both the first pass and the second pass. One of the things that we added to this.
I haven't made the copy.
This is the wrong link.
It should be to the screening, right?
1 second.
Sorry, that was my fault.
Which is the
screening pass. Yeah.
So one change we made here is to understand which trailing period you want to apply your multiple to in terms of the SDE period, because before it just had trailing 12 months. You actually input the trailing 4 periods gross profit. So 4 periods at this point would be trailing 12 months gross profit, the 2023 gross profit, the 2022 gross profit, and the 2021 gross profit. Based on that, this updates to let you know which average to use, and it automatically also updates over here in your actual price. This is still a little bit simplistic. There's a couple, I will be doing a full kind of redesign of this in the next month or so, but it's, I think, better than what we had before. The reason I use gross profit, this is explained in the training, but the reason we use gross profit as opposed to SDE is because you often encounter businesses that have been sort of focusing on growth. And then in terms of the actual various options, you'll either use the trailing 12 months based on constant growth. You'll use the trailing 12 months because it is based on sort of constant decline. If it is based on constant decline, I automatically give it a pretty serious penalty. Again, that's all explained in the actual content, or you can go through the formula if you like. And if it is based on trailing growth, I currently don't give it a premium. Actually, I give it a 10% premium. You may be wanting to give it a larger premium. I'll redo this based on actual CAGR. But I think this is a better place to start. And I didn't want people to only make offers on the trailing 12 months. It's still using the SDE numbers for the multiple. It's just using the gross profit numbers to determine which SDE number to use on the multiple. Another caveat here, if there is very, very slight growth or very, very slight decline, it may overly reward or penalize. So just be aware of that. If like the decline is, by $100 each year, that's not really a bad thing. I'd see that as an average sort of stable deal.
We do describe that danger in the training too.
Is that it?
That's it.
That's it.
So questions?
There's a question from Kay in the chat. Is the gross profit based? Is the gross profit based weighing a drop down, or is that field auto selected?
The weighting is based on a formula. So based on the actual inputs that you put in those 4 gross profit periods, it automatically determines which one you should use. Did you have a question?
Yeah. Yes. I'm not sure if I'm asking the same thing, but so I'm just trying to make sure that I'm understanding this. Depending on the gross profit of the business, that's when you can determine a better multiple rather than just going by EBITDA, because maybe you're saying, what if operations spend a lot more money on operations and growing and stuff like that? So you look at the gross profit. Is that what this is?
Yeah, so it's really just based on the gross profit trend, it's choosing SDE to use your multiple by, right? So it's not just trailing 12 months. That's all. There is in the second pass, and that was in the old training as well, there is also a gross profit analysis that will sort of adjust that intrinsic multiple up or down in addition to this. But this is just a way for you to determine, hey, based on the financials I put in, should I be making the offer at 3.2x of trailing 12 months or 3.2x of the average of the last 3 years? Or should I be giving it a big, hit because there's actually a constant decline and it's got a negative CAGR?
Gotcha. Okay. Thank you.
Yep. In terms of, yeah, anyone feel free to, oh, Gloria, sorry, I saw your hand raised.
Yes. Are you changing the table of suggested multiples?
We can. It hasn't. The only change is that the HVAC multiples are a little higher now, as that's just sort of what's happened in the industry. That doesn't necessarily mean that I personally think that you should be paying those multiples versus, like, to me, that just makes like plumbing companies a little bit more desirable because they happen to be lower multiple. Some people have requested to put in suggested multiples in other areas. And if anyone has that request, please reach out and we'll do some research. Obviously, we've put in most of the areas that we have some experience in. But we're happy to do some more research to determine the right multiples in other areas.
In the Discover and Analyze Industries, Gloria, there's a final chapter now that looks at the outlook for HVAC and electric and plumbing. And I'd like to add to that over time.
Okay, thank you. Thank you.
Goodness. You're muted.
Thank you. I had a quick question. So I wanted to ask, have the multiples, is it based, like on average, should we expect the multiples will be a little higher based on these changes? Or is it about the same? I asked, like, I've made a few offers in the recent past that have been a little lower when I use the calculator. So trying to understand, is the market moved up generally, like you said, in HVAC, or and does this address part of that?
I just really in HVAC is where I'm seeing it. Brokers, again, will price this all over the place.
Yeah.
But overall, what I've really noticed is that multiples have more or less stayed the same. There are more brokers who are kind of ridiculous, and I kind of just, I'll still open with an offer around where the IV sort of takes me.
Mm-hmm.
Even if they're asking 5 million, that means we offer 3.6. And often you'll also see like what they're using. If they say it's based on the trailing 12 months, but you want to make it the same multiple on an average 3-year period. I think brokers are fairly receptive to that typically, but I don't think multiple overall has changed outside of HVAC.
The outlook for HVAC is actually quite bright, and people are saying 6-7% CAGR up to 2030. And you don't see that in electrical or in plumbing, for example.
Well, electrical I'd argue is even higher.
Not my stuff.
Got it. And so I guess you're just saying you're seeing higher multiples like headline, but not necessarily that's not where they're closing per se.
Correct. And the thing that I've noticed as we put more and more offers out is that there has been a bit more leniency on the seller financing side. So we're often, recommending that people go out with a 20% note with 2 years deferred, with a 10-year AM, right? And what gets countered is often, still quite reasonable. So.
Okay.
Yeah.
And I guess the other piece of it was within the calculator, you have, trying to get the deal in under 10% or 10% below the IV. Is that kind of still where you're at? Is that how you guys think about making offers based on the calculator?
I still look at it as being just looking for some kind of delta between the asking price and the IV. Just because, again, I think brokers really are simplistic when it comes to valuing a business. And I would say everyone needs to kind of look at that based on the size of their thesis, right? Because if you have a very large aperture, I think you can probably make the decision, I'm only going to make offers that have like a massive delta, right? If you have a very narrow aperture, you may need, like, if you're only looking in New York, and you want certain industries, you may need to be, willing to make offers at 80%, right?
Got it.
Go ahead, Mark.
Yeah, I have 2 questions for you guys, and I won't take too long. The first question that I have you ever used like maybe a private wealth management, say like JP Morgan or Morgan Stanley, to find deals for like middle market deals or upper middle market deals? And the next question that I have, is it common to see in the SIM a business that has 150 million in revenue, but the book value of the business is only $15 million? Is that common? Like 10% of what the revenue is.
Those are very different questions. Okay, first question. There are good sources. I wouldn't say JP, like investment banks are only looking at much larger businesses. I would say actually commercial real estate brokers are a good source of deal flow. If you want to talk to them for this size of deal.
Okay.
And then as your second question, it really depends. If it's like super low margin business, I guess it's possible, but
it was for manufacturing, a steel manufacturing plant, and I found out they had a long-term lease, and so they were getting funding from China.
Yeah, I mean, that's, if you want to hit me up with like details on that particular deal later, like just send me a DM. I'll take a look. Yeah.
Sounds okay. Thanks both of you for your presentation too.
Yep. Are there any requests in content? Like I said, I'm gonna be adding a lot on how to do off-market search. So how to do it through PPC, how to do it through call centers, how to use AI for it, how to build lists, how to use trade shows, and knock on doors if that's something that you want to do. That's planned. And then the other thing that's planned is how to raise equity. So from 2 different sources. One, what terms, very simple terms that I would recommend if you want to raise from friends and family. And then 2 would be how to raise from sort of search investors. And one of the things that Rich is working on is also putting together a bit of a little private network for AEs of little funds and searchers that are interested in investing in businesses. So you have more options than just acquire capital if you're looking for equity. And then after that, yeah, I'm going to be doing a bit of a professionalization of all of the calculators. So that'll be happening at the same time. But I would expect both of these things in the next few months by the summer.
Sweet. There is a couple questions, Brother Hayden, that I probably will want to talk to you about, but I'll have to remember them because I wrote them down, and it's probably dealing with the calculations and dealing with the multipliers, if I'm not mistaken. I have to remember it, but I have it
Okay.
written down. I'll shoot you a text message about it, about some of the calculations for calculating the business.
Sounds good.
Thanks, brother.
Is there anything else that you feel is a bit of a hole? Casey said, I'd like to have some more content recommendations about forming and using an acquisition entity. That's good.
I did add stuff. I should have mentioned that. I believe it's at the beginning of the last mile, at the beginning of the second part, and there's quite a bit about forming and taxation, more than there was before.
Is there a certain part of that? Is there a certain like stage that you're wondering about?
Yeah, just I think I'm too late right now for that, and I was kind of waiting to know when I should do that. I have several LLCs, so like forming an LLC is pretty trivial. I'm not worried about that part. It's just what do I call it? What type of LLC? Should it be an LLC? You know, all these kind of questions, and so just having more clarity around that would have been helpful for me.
Okay. Yeah, the answer will be it depends on many factors, and we'll describe the factors as best as we can.
As everything does.
Well, in case anyone thinks of anything, we'll be sending out this presentation to everyone. Also, we'll get the recording up as soon as possible. And yeah, feel free to reach out to us. We're gonna try to keep a public sort of content roadmap, sort of like developers do, in terms of new features being added, and try to keep ourselves accountable to that. Yeah, and for now, unless there's other requests, we'll get to that, Casey, and we'll be working on sort of the off-market sourcing and the raising equity side from a content perspective.
I have one more question. With the revised content, I had already went outside my time window of having access to the training material. Will I be re-granted access, or is it not a
Yeah,
proper
just send Annie a message.
Okay.
Yeah. Cool. Sure recall. Everyone gets 23 minutes more in their day.
Thank you, guys.
Thank you, everyone.